We just had the March consumer sentiment beating estimates, strong economic growth, strong jobs, but still subdued inflation. Seems like a Goldilocks environment. How long will this continue?
Well, we put out a report a couple of days ago called Taste Great, Less Filling, that you have better economic data and less inflation, which means that it's really a reversal of what we saw, which kicked off all this market volatility a month ago, where there was a concern that wage inflation was going to in some way push rates higher and pressure margins, and the Fed was going to be dragged into this thing. And the data is telling us right now that the economy may be even better than we thought, but the threat is not nearly as problematic. So the market is loving this, and if you look at the bit that it's been up, it probably has even further to go on this kind of terrific mix of growth and less inflation.
Do we see inflation expectations rise and rise quickly? I mean, we did get the preliminary UMISH data, which did show that the one-year inflation expectation was higher than last month.
Yeah, I mean, listen, we have a tight labor market, and if you actually, and that should move wages higher. If you look at the small business surveys, and so you ask a small business guy, do you expect to have to pay your people more money? They're saying yes. And so the question is that can we absorb that? Is it at problematic levels? And so I don't think it's at problematic levels, but at some point in time, higher wages, which sound great to the average person watching the show, also means that margins of companies come under pressure, and that hurts, profits, and that means the companies lay off workers. So there's a nice mix of where you want that to be. And right now, we're kind of in the sweet spot, but it's something that I can tell you I'm obsessed with it, because if we don't have a wage problem in terms of margins, I think this cycle is just going to keep going and going, and the upside to stocks are better than we think.